Good morning, everybody. We are waiting for the market to wake up at one day or another here. Hold on. Yeah, just like been running in place doing nothing. Okay. All righty. So, well, we got to do our factory work. That's our job. While we're waiting for the market to do whatever it's going to do. Today's Wednesday, so we got MT Live to look forward to. FOMC minutes at 2:00. That's the past. I don't know that that's going to move the markets at all. And then tomorrow there's economic reports to look forward to. So I don't know if maybe today's going to be another, back and forth day. But you can see what's going on here. Just chopping back and forth. Let me see if I have. No, it's not what I want. Sometimes you get a different perspective just by looking at the chart in a very, very simple way, and we come to the same conclusions, but maybe it provides something. So I turn this into a line chart, and you can clearly it's in a downtrend. The momentum slowed, which we've discussed. It has not been able to rally any amount that would change our bias off of this low. And, kind of yesterday's title, a lot to do about nothing. And we still got that happening here. And with that in mind, we will look at the rest of it. You can see a little narrow range inside day there on the weekly chart, lower left. Nothing happening there. And I don't know. You can't say how many days. I don't have a study of historical data, but market environments change. I don't, put much weight on that type of historical data that says, hey, when such and such happened, in so many days, then this happened, where it could be interesting. It doesn't mean it's going to happen again. But one of the things that we look at that we know is a fact of what is, doesn't necessarily say what's going to happen all the time, but it's a guide to it, is that we got a nasty wide range bar and a downtrend, and bottoming tail bar, a nice decent green bar, and no follow through. And all of that going nowhere is just running in place in the lower half of this potent power bar, right? I like that, Joe. Factory work is how we get paid. And he keeps us our expectations in alignment with what is going on. Because look, when markets are running in place, and I remember what year it was, but going back in the early 2000s, it was rough, man. After the market went down for a while, and it's kind of like, the markets just kind of got beaten to a pulp, and they just started, flip-flopping around and going nowhere. And, our goal here is produce income, money. And as far as trading something like this, that's difficult. And that's right. From a swing trading perspective, it just ain't happening because it ain't moving. Intraday, it's been pretty erratic, lack of trending moves and just whips. So anyway, it is what it is. And we'll see if it resolves itself either today or tomorrow when those reports come out. Maybe those economic reports will move the market. So SPY, same story there. It was down yesterday and, looked like it was heading down to the lows and kind of flipped back up, but just didn't make any headway. One of the things we've talked about over the last week or so was, hey, you know what? We got these, and even back here, we get these moves that are suggestive that prices can go a bit higher within the downtrend, but they don't, and go back down. And so now, this being at support and an inability to rise, we could only look at it as being bearish price action, neutral for the moment, but bearish price action. So where are we at? 392.5 inside bar. Looking at SPX. Since this doesn't update, got an inside bar going nowhere. Now I go and look at the option premiums, and McGraw is helping me there with a suggestion of 38.10, which below near 38 should be fine. I think, especially for today, FOMC minutes are not likely to move this market other than whips intraday. Where's my page here? And SPX and 38.10, 75 by 85, which is fine. 38.10. I don't like the location if this should roll over, because these markets have been moving a lot intraday. I mean, this is like nothing, but yeah, 45 cents, 25 wide. Well, you know what? I hear what you're saying, but if we're going to get burnt, and it is at support. I know what it is. I know. But it is in a downtrend, McGraw. So if whatever happens that it moves this market, that low is going to get taken out. And if the markets move in the direction of the prevailing trend, these lows are less respectable. Now, that doesn't mean from a 0 DTE option point of view, if it went down there, the pain in the moment, which will be a bit excruciating, that doesn't mean it won't pop up and hold and be okay. But I'd rather see if there's the potential for some type of no-brainer, which would be let the markets start moving, and they're not moving yet. If they went down there, they get further away. Up above, $40.30, which is 80 by 95, or $40.35. See, we're not getting what we did a month or so ago to get really far away. But if we wait a little while and see which direction these markets might go, we may be able to get a little further away. So again, 38, 40, 30 is 90 by $1.05, but 35. Right, David, I mentioned that. Coming up here by the 20. So getting above, so we got a line of defense at 4,000, which is nothing there. So we look at where the real line of defense is, and that's way up here at 40.80, and there's nothing up there. Whereas, a month or so ago, we'd be like, oh, there was juice up here. It's like, just go get the money. No brainer. Now we are within striking distance of a move really happening. Realized volatility is basically the same as implied volatility. Well, I'm sure that means something, McGraw, but me, those big words give me a little, brain damage. But I have to think about it for a while. But I have noticed that the VIX, it does trend intraday, but what we see happening here is just like a lot of nothing again. VIX ups and downs, and when we get those sell-offs, it doesn't really poke up here. So, it's kind of like, what I wrote about over the weekend, and I think I said on Monday, is that, these institutions, and I think rightly so, are just chomping at the bit to get long. So, and if it does happen, my thinking is, let's get one more blast to the downside and see this VIX spike up and the community, the message from that would be these institutions that are chomping at the bit to get long. And I say don't blame them because, you've got the markets down, multiple weeks in a row and close here. Right. But let's shed a little more blood and just, would just add a little bit more assurance because this is just going nowhere. And maybe Thursday, Friday news will do that. We'll see. So we got a range expansion bottoming tail bar, and now this running in place. We either need to see this drop down into this area down here and be nasty, or we need to see a wide range igniting bar. I mean, look, it's one or the other, right? So, or a gap down and something like this. And then it's like, okay, let's do it. And so whatever happens, you give it a big stop, and then, we're going to get some kind of counter trend rally. It means that the predictive move predicted by the VIX is what has been happening. Not so much of an edge usually realizes less than implied, so indicates big money is already hedged. And that's probably why these premiums are relatively close together versus where they are. So so many things that we look at in the markets, and we had a little discussion, was asked about all of these market internal gauges that I used to use years ago, and now I use a couple of things. And what you find is that there are very complicated ways. There's very simple ways. There's a lot of different ways that can be used to come to the same conclusion. Right? So we see price action, which is the king, price is king, where we can see that nothing is happening. Right? And whether that means they're hedged, like we see option activity, bringing premiums closer together. In another words, the spring is being wound. We see lows getting closer together and so on. So something's going to happen, right? And the moment in time that it happens, we don't know exactly when that'll be, but based on everything we're talking, we know we're close, but it's, a little frustrating waiting for it to happen. So the goal has to be here not to get chewed up in what's going on, and and not be licking your wounds at the time when it happens and then be doing nothing, right? So maybe in middle of June, I don't know. I hope not. I'm hoping that by the end of this month something's going to happen here. So anyway, I'm going to see which way things move here, one way or the other, in the first maybe even a half hour. But the story is further away we can get, the better. So whether it's up here or whether it's down here, since this is basically in the middle of there, it's kind of a coin flip in my mind. Other than the trend being down, the trend is down. They want to buy, which we can see, right? Topping tail, bottoming tail, went up, went down, bottoming tail bar. So basically, I don't know. Dan's got this lucky market coin that lets me borrow once in a while, and we'll give it a flip and see what happens. All right, weaker. All right. If we look at this on a closing basis, it's like a little sideways, up, sell, slam it down, down, down. Continues to move down. Hopefully we get a flush, but clearly weakness. And look at the range or the bodies of the candles getting relatively tight together. Another way of seeing the spring getting wound. And so look at the ranges coming down here, tightening up, increase, tightening up, failure, but the trend is down, move up again. Now about as tight as eyeballing it as it's been. YM, I have a sell setup. It would have to break a prior day's low, but I don't know. Being honest with you, I don't know. You know, we need to see some kind of range expansion, some kind of fake out, some kind of a failure move happen, something even like this, how it popped up there with the range expanded. And then as it went down under the low, uh, some kind of shock. Russell, still a lot to do about nothing here. Bitcoin, absolutely dead in the water. You know, and go to the beach, but you might miss the big event if it ever happens. But absolutely nothing. Silver, little rollover, not much of anything there. Gold, rolling over a little bit. Oh, Steve, but got an itch this morning. So Steve's putting some kind of thing out here with some Fibonacci aficionado, which means, Steven, you're really getting desperate. Right? You're like the guy, and we've all been there, joking, of course. I just like to make some kind of an analogy, like a guy that's on the 12-step program, and there's just something egging at you to go get, that drink or that whatever choice, and it's like, let me just go take a peek at the bottle, and maybe that'll be enough. So I'll share this with YouTube so they can. Steve was saying, "Oh, so looking for some kind of indication of what's going on." Look, we know, where we want to be here, right? And we know what we need to see happen. It's just not happening. I don't know. All we need to do is look to the left, and we know that this wide area here, rather than fibs looking for an exact moment in time, we just want to see either a wide range bar here or a spike down here where we're going to look for the reversal. Right? And so, I mean, that's really the takeaway from this conversation, is that we need to see one or the other. That's the short answer to this, conversation we're having. We need to see something happen, and it ain't happening. All right. It ain't happening. What's Euro moving up here? No, it's moving down. Why is gold coming down here? So, I looking at, see, intraday, this is moving up. And one of my thoughts last night was like, the market hasn't really liked the dollar strengthening like this. Sometimes it does, and sometimes it doesn't. And I see this pulling back toward the 50 and the support here. And I'm thinking, you know what? This market is using up its bullets where it had this an attempt to rally, where this has come down, and we see the 5-year rolling over here. And so, the market's interest rates going up. Markets don't like that. What's going on with that? Inflation. So this is looking like, and maybe this is inflation backing off. Well, kind of, but it also is like, when interest rates start coming down, it's also the market coming to maybe an acceptance of, and McGraw, I love that post you put on Facebook about Powell and his promises. If I could find it again, I'd share it with everybody. That was hilarious. But it also could be a piece of information that's saying recession is coming, because when interest rates are going down, it's going down because there isn't a demand for money. I think I did. Some of them are really good. So, this coming down may positive on one side, not so positive on another side. And here we've got the 10-year down here near this pivot low, where buyers should begin to step up, right? Sell bonds, yields go up. And so, using up some of the bullets of the positive things that have happened, and the markets can't rally, that's relative weakness. And, we've got the 3-month here poking higher yesterday. And it's like, Powell, you kind of make fun of that movie Back to the Future, where Biff is banging on the guy's head. What was his name, Dan? McFly banging his head. You moron, wake up. Right. It's kind of Biff banging on Powell's head saying, hey, McFly, you better do better than half a point here because, things are going to go into the crapper here pretty soon. So, and maybe going into the crapper kind of anticipates, hey, things have gone down enough. We've put enough of the negativity into the prices here and it'll be okay. So there you have it. Industrials, nothing. Transports, just weak. So we'll make the best of it for as long as it lasts. And it always changes. To you, Dan.
Good morning. Happy SPY 0DTE MT Live Day. We'll be talking about continuation sandwich patterns. And then the following week, shorting bear market, not shorting, buying bear market bounces. Week after that, just shorting. So many people don't know, what does short mean? What do you mean I got to borrow something? All right, we're actually talking about shorts. We're heavily short in the advisory letter. In fact, we're 100% short, except you've got some. Oh, did I do the wrong share thing? Hold on. Yep, sure did. Thanks. Yeah, I just grabbed the wrong share. All right, so our only two bullish positions, we shorted a way out of the money put on Costco 340s, I think, way the heck down here for an earnings trade, which is tomorrow. But let's see, it could be a day trade. It's a bullish turn on the daily, bullish 15-minute. And then we have a put spread. Where are you? PBT. We're short the 12.5 puts. Everything else in the advisory letter is short stop. So we're doing good there. We're in trail mode. Let's see. Fur asked about this. It's a retest pattern with a range expansion. I like it. I like it. It might be extended if it triggers because of this end of day run, but it's worth watching, sure. I just saw this going by the ticker when Greg was talking. Looks like an ADR, but a little gap breakout here. Has room, 37, 37.50. STON, I saw blasting off pre-market here, but it moved too much. You can put it in a 5-minute window if you are interested in day trading, stuff like that. Walmart, one of the retails that got cream last week. I still have my eye on this to sell a put spread. Another, well, this got creamed yesterday and it's gapping up. I'm not crazy about little toys like that. All right, ASO. I don't think this was earnings, but I think it's just getting whacked with DKS. So bottom right here, I have this as a gap and snap candidate. Shoot, I love these. The more gap, the better. I mean, look at this thing down from 110, and now you're gapping down to 64. So this was on earnings, and volatility is going to be high. The gap down is going to keep premiums high. So I absolutely love selling puts on these. But I'll tell you within the first hour when. So I have that bottom right. Wendy's here. I have in the middle. Hey, do you all remember? Here's another one when it was climactic. And I think this gap down day was earnings, and that was also a gap and snap candidate for me. But you can see the fact that it closed with an ugly red bar means that it was not a gap and snap. It means that it closed near the low. But guess what? I still said in the green room, I don't care. You will turn someday. I don't see Wendy's going out of business. And then look, the very next day was a 180 reversal. And then here's your retest and for a double bottom, and now it's gapping up. I think there's some, I think the news was the biggest shareholder was talking about maybe trying to sell it or whatever. Nice being, yeah, Jerry on Costco. Yeah, those are the type that I don't mind selling naked puts on them, more spreads, but it's up to you if you want to spread or but this thing, look, this was a Wall Street darling, and it still is. And the thing's down from 600 to low fours. Yeah, I'll take that trade. Every trade we take is an intelligent speculation, right? We don't know if we're right. The thing can fail the very next day. 5 minutes later, it can fail. But we make our decisions based on our approach in the moment. All right, PLAB 16 and a quarter. All right, it's not gapping out yet, but it's a bullish gap deep into that. So I like that. I'm gonna put that in a window on my other computer. And that was earnings. UNG, that's the natural gas. Yeah, I saw Boyle up. Boyle is the levered one. Ramp. Wow, this we actually shorted a number of continuation breakdowns like this yesterday, but this one was earnings, so I wouldn't have done it except for a day trade, but that poor thing still looks lower. Lift. Wow, that was an ugly close. There was an article in today's journal about Lyft and Uber still trying to fight to save costs. You know what? I think Uber might have a better setup as a new trade, Thomas. I would love this as a 1, 2, 3 if we get a little inside bar today. Let's put Uber on the list. All right, back to here. A alpha gapping up on earnings. It's up a lot to me. Rick, I think this is Rick's Cabaret, maybe? No, well, I don't know. It says RCI Holdings. Maybe that's his code name. It says it's up. I don't see a gap. We'll come back. Cal, $24. Big gap on earnings. Gap's too big for me. Toll Brothers, big old mess. Downtrend. It's in a trading range and a downtrend. I don't see a gap. Dix, we talked about DY. Now, if DY can, today's Wednesday, if DY can get over Monday's high, then I like it. Then first target 200. EXPR, another little baby retailer, got creamed into earnings. Today was earnings. This is what we call a bullish gap surprise. So 30-minute high, that could be a day trade long. Costs we talked about. We have that naked put. XLU I posted, my alarm just went off. Urban Cowboy, EGHT low alarm. XLU. We might get even a pullback on XLU. All right, EGHT. This was one of our many shorts yesterday. So my low alarm went off. I'm now going to set an alarm here at the 20 MA, just arbitrarily, just so I can keep an eye on it. So 697 is my new up alarm. And new low alarm, just arbitrary, 6.5. and that's how you let the computer help you monitor things. JWN had earnings, no pattern. Intuit had earnings. This could be a put spread, 30-minute high. I like